What do we do with the travel and leisure stocks in this weird moment where the economy's coming back, but so is COVID-19? Consider the case of Marriott Vacations Worldwide, VAC. That's the timeshare and vacation rental business that was spun off by Marriott International nearly a decade ago. Like most of the lodging plays, Marriott Vacations got obliterated when the market crashed in February and March, with the stock plummeting from $130 to its lows down to $30. You know, that's a 77% decline. But once the company was able to raise some fresh debt financing and the crisis started looking a lot less existential, the stock got its groove back. Marriott Vacations is now trading in the mid-90s. If you believe we're going back to normal, then this stock is absolutely worth owning. But it's been hammered over the last couple of days as the whole travel and leisure cohort suddenly fallen out of favor again because the new normal has some major differences with the old normal. So is this a buying opportunity? We need to be a little more cautious. Let's dig deeper with Steve Weiss. He's the president and CEO of Marriott Vacations Worldwide. Get a better sense of how his company's doing and where it's headed. Mr. Weiss, welcome back to Mad Money.
Hi, Jim. How are you? Great to be back with you.
I'm glad to see you, Steve. It's great to see you. Is that at your home doing this from?
No, I'm actually in my office here at work.
All right, fair enough. Well, let's go to a question about work. You are blessed, sir. You have said that you have seen just over 1% of your borrowers asked for your deferred payment program. We have companies go at default. We have individuals that I'm worried about with credit cards. That's an astonishing figure. Why do you think that is?
I think part of it is because of who we typically target as our owners. You may recall that we have people that average household income is north of $125,000, self-reported average net worth over $1.5 million. Many people view this as just a monthly payment, and quite frankly, they put great value on their vacations. The people that have reached out to us, we set up a deferred payment program for those that needed it because they either lost their job or 30% of their income. And when we asked them that question, do they qualify? Some said, nah, I was just calling to see if I could defer things. But by and large, only about 1% of our people have actually taken us up on that. And we're happy to try to help whenever we can.
Well, that's a tremendous loyalty that it shows. And it brings to another question that I have. I always used to hear that, look, timeshares are not bought, they're sold. And yet, this has not been a period where people have been able to sell anything. They're sheltering at home. The salespeople themselves haven't been able to show people various units that they might want. Is that old view a canard? Because a lot of people seem to want to have a timeshare.
Well, I think kind of history kind of speaks to that issue. For the last several years, more than 60% of our sales has been to our existing owners that want to buy more of our product. So that in and of itself says that they're not being sold, they're actually buying. But with that said, I mean, when the virus kind of really hit the fan, the end of March, we closed all of our sales centers. We kept them closed till the end of May. We've just opened 6 back up here this past week. We tried to augment that with some enhanced telesales activity where we took some of our sales executives that were used to taking physical tours and we actually put them on the phone. And I'm happy to report that we've got about $17 million worth of sales in about 4 weeks as a result of that. Not a big number, but it does keep the lights on.
Well, but Steve, let me ask you. Housing itself is doing pretty well. We had Jay Powell speaking today. Rates are incredibly low. Don't these represent great investments where you have very little interest costs? You can rent them out at a level where people are saying, you know what? I want a vacation that is going to be clean because I know you disinfect everything at a nice resort, that the people who are buying the second and the third with low interest rates, they're financially making a good investment.
Yeah, obviously, we try to stay away from the I word because it's a registered real estate product. We want to treat it like a security. But with that said, I think people are making a wise decision to invest in their vacations for the future. And as you well know, vacations are becoming ever more important than they've ever been. People need time away to be able to kind of find a way to reinvent themselves, reinvigorate themselves. And as a result, we think we provide a perfect opportunity of that in some pretty nice spaces, obviously bigger than hotel rooms, in some pretty great destinations.
Now, in your conference call at the very beginning, you talk about it starting. You're looking at the the Cadence, Marco Island, 22%, and then 54% for, and then 80%, Newport Coast, Southern California, 23, 63, 80. These are remarkable comebacks for these very important areas.
They are, and quite frankly, it's kind of playing out as we thought it would. I won't say we were brilliant in being able to do this. I think it's pretty logical. We thought that the leisure transient would come back first before business or group. We thought that short drive markets would come back first, then long drive, then short flight, long flight, and then last but not least, kind of the transoceanic stuff. And in fact, we're seeing that. We're seeing that in Hilton Head, Myrtle Beach, Marco Island, Florida, Newport Coast, California, Park City, Utah. These are places that people can get to. They're great vacation destinations. And our owners who own their vacations and put pretty high value in them, they're anxious to get out of their house and get to some place where they can enjoy themselves.
One last question. There had always been this debate, and you solved it for me, but we haven't seen you in a long time. There were people who were saying, you know what, Airbnb is going to wipe out Marriott Vacations Worldwide. I know that wasn't the case. You taught me that wasn't the case. But, you know, we have a lot of new viewers and younger viewers, so maybe you can explain to them why you're not dead and why Airbnb, frankly, hasn't been able to come public.
Well, I think part of it is simply we do offer a slightly different product. You know, Airbnb, while they have lots of product everywhere, if you think about many destinations, you're spending time in someone's condo. I've said, you know, if I was to go to New York City with my family, if my kids were younger, the first thing I'd say when I came through the door is don't touch anything, because it's not, you know, and those are not resorts that are amenitized. They don't have swimming pools, gyms, you name it. And we believe that we offer kind of a full service experience in terms of being able to get housekeeping and food and beverage facilities and everything, things that you can't really find in most Airbnb locations. So I think Airbnb has done a remarkable job of being able to put together an offering that resonates with some people. It doesn't necessarily resonate with us. You walk around our resorts, you'll see mostly families with kids traveling. Most Airbnbs, it's largely singles or couples not traveling with their kids.
All right. Well, look, Steve, it's great to see you. I know that you're a terrific businessman. Misjudged at the beginning by me by not understanding the Airbnb relationship. You're very different businesses, and you're a very well-run business. Thank you so much for coming on Mad Money.
Thanks, Jim. I appreciate you having me.
Absolutely. That's Steve Weiss, President and CEO of Marriott Vacations Worldwide. I learned a lot. It's good business. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.